I am building a dividend portfolio from scratch that I started with just $10. Just $10. Today, that portfolio is sitting at just under $16,000, and it's earning me a little bit over $85 every single month on average throughout the year. And every month that average increases due to both dividend reinvestments and purchasing more dividend stocks from my job, my everyday 9 to 5, right? And so you don't have to be a genius to become your own bank, you all. You don't have to be a genius to become your own bank and make money every single month in the stock market. You don't have to buy courses to do this. If you are new here, welcome. If you've been around, welcome back. What am I trying to do with this dividend portfolio? Well, I don't have the equity to outright invest hundreds of thousands or even tens of thousands of dollars into the real estate market itself, right? To earn what is known as passive income. I don't have the type of finances to go out and buy a building, right? But because dividends are one of the greatest tools to obtaining wealth that the everyday blue collar worker can employ to try to build wealth, I don't have to, okay? I don't have to have a ton of money in the bank already. All I need to do is strategize on the best dividend stocks to buy that will pay me to hold them every single month, and voila. Suddenly, I'm a real estate investor making passive income every single month based off of what I am investing in, just like I would be doing if I'd owned an apartment building or a home, except I get to collect that passive income every month without having to worry about maintenance, terrible tenants, and, emergency calls at 2 a.m. in the morning telling me that I need to come fix something. Dividend investing is a literal cheat code. It's a literal cheat code in the investing world. Warren Buffett talked about it. Charlie Munger talked about it. And so today we're talking about a company that I believe is not only undervalued, but also pays out a dividend every single month. This is Pennant Park Floating Rate Capital, okay? Ticker symbol PFLT. So when I say PFLT, you already know what I'm talking about. Here is my current position in PFLT within my dividend portfolio so that I don't just get on here and talk without putting some money behind my words. There is no better position to be in as an investor than the position of being able to purchase shares of a company that you already know and love at a discount. Let me say that one more time. There is no better position to be in as an investor than to be in the position of being able to purchase shares of a company that you already know and love. You already have access to. You already know about their company at a discount. So, if you are a dividend investor looking for income, inflation protection, and diversified exposure, you may want to take a closer look at PFLT. As an investor, one of the things analysts are always paying attention to are the rising interest rates. Okay, that's especially true for REIT investors and BDC investors, right? Because those things directly affects not only consumers looking for loans, credit cards, and homes, right? Not only the consumers looking for those things, but it also heavily impacts the REIT industry and, more importantly, the investors overall who are exposed to that industry. So really quickly, I'll explain what PFLT is, why it could be a compelling investment for, anybody who's looking to pick up some REITs, what risks to watch out for, and what the future may or might hold. So PFLT is a business development company, a BDC, you all. And their mandate is to generate both current income and capital appreciation while preserving the capital that they already have, while rewarding their investors with monthly checks in the form of dividend payouts. Okay? They are a business development company. And for those of you wondering, yes, there's a difference between a BDC and a REIT. Like most BDCs, they invest primarily in U.S. middle market companies. What does that mean? They invest in middle market companies. Middle market companies are companies that don't necessarily have the longevity and cash flow of, say, a Coca-Cola, right? They don't have the wide moat. They don't have the wide financial backing and the longevity of a Coca-Cola, but they're also not startup companies or still what we call in their infancy phase. And because its investments are what is known as floating rates, their income tends to adjust upward as interest rates rise. So it gives it a potential hedge against rising interest rates during tough financial climates, like the one that we're in right now, right? So in terms of why an investor like myself would invest into a company like PFLT, well, number one, we just talked about the floating rate structure, okay? With most of their debt investments tied to floating rates, PFLT is going to benefit from increases in benchmark rates. What does this mean? It means that throughout the year, when the banks, the central banks, are hiking up interest rates, right? They're making it more difficult for people to get loans, whether it's cars or homes or whatever, businesses, whatever. When they're hiking up rates or where there's an upward pressure on rates, floating prices will adjust. Floating prices will adjust for companies like PFLT, which can obviously help preserve some of their yield within the stock price. Number two, PFLT's focus here can offer both yield and potential for capital appreciation. Of course, this is assuming that the real estate climate is at least stable and not in a state of total disaster like we've been for the past 4 years or so, right? But it's still offering you a chance at taking less risk because of those floating rates. So number three, what do they do well? What do they do? What do they do well? What do investors like about PFLT's business? Well, they've got proven management and intelligent execution when it comes to its business ventures and deals, which includes diversifying their portfolio and managing their credit risk. Okay? Those are the things that most investors tend to lean towards PFLT for. Because diversifying your portfolio, we already know how important that is with our dividend portfolios. So I expect the company to be able to understand the importance of that as well. Lastly, we need to know how PennantPark makes their money. How are they generating cash flow? With any company that you invest in, you need to know how that company is making money. So I mentioned earlier that PennantPark invests in debt. They buy debt from these middle market companies and make money on the back end through the interest rates, the interest generated from loans that they dish out. They also collect fees they collect through the process of their debt investments. And also, by investing somewhat early into companies that they hope will someday mature and continue to generate strong cash flow, and is a byproduct, and as a byproduct will grow in capital appreciation, they can go ahead in the future sometime down the line and sell that asset, sell that investment for a substantial profit, because by that time the business will have matured, meaning the price will have risen, and they will have gotten a huge boon in their ROI, their return on investment. All right. So are you all still with me? Is everybody still with me here? So now that we know what PFLT is and how they make their money, the last thing we're going to do here is talk about their current price point, their performance, their dividend payouts, and the risk associated with investing into their business. Now, let me get straight to stockanalysis.com, a free site. They're not paying me to tell you this, but it's just a great tool that you can use as an investor to go and check out the stocks that you guys are interested in, that you ladies and gentlemen are interested in. And so I have PennantPark pulled up right here. Currently, right now, at the time of this recording, it's sitting at $8.80. That is below $10 a share, you all. Off the top of my head, I can at least think of one other one, AGNC, which is below $10 as well. But in my opinion, if I had to choose which one was the better deal, I know AGNC pays out 12 cents per month when it comes to their dividend payouts, and PennantPark only pays out 10 cents, I believe. But I still believe that PennantPark has a lot more upswing potential for price appreciation than AGNC has. So today I will be investing just $100 into PennantPark. That's just me. I'm not telling you all that you have to do it. I'm telling you what I'm doing. I'm putting my money where my mouth is because I think this is a prime opportunity to invest in a company that is currently undervalued. Now, here is where we talk about the risks, okay, and some of the negative things when it comes to PennantPark, because if you click on the max chart, you will see that they are down nearly 40%, okay, nearly 40%. And their debut was back in 2012. So again, this is a pretty young company in terms of business and in terms of the investing market. They haven't been around for very long. 2012 isn't a long time for an investor to look at. It's not a ton of data for us to look at. Yes, I understand it's over 10 years, but in terms of in other companies that I invest into, for me, that's not a ton of time that we can look in back into and see how they've done. But since its conception, we can see certainly that they are down nearly 40%. That's not good, right? You can see the dip there in 2020, which no doubt is a result of the pandemic. And so you can see, I can understand why somebody would look at this and say, well, they haven't been profitable in terms of they haven't been paying out the dividend investor in terms of price appreciation for a decade. You know, if you bought this at the beginning when they IPO'd, you would be in the hole right now. So I just think that right now, as an investor, one of the things that's important for us to do is to be able to identify the point in time throughout the year where the stocks that we love, the companies that we deal with, and the companies that we invest into are underwater and is the right time to buy. I understand, yes, we're not supposed to time the market. Time in the market beats timing the market. Yes, I understand that. That does not mean that we also can't identify specific times when we know companies are undervalued and that we need to go in and buy up some shares so that we can be on the receiving end of that upswing when the company comes back. When interest rates increase and the Fed makes an announcement that says that the interest rates are looking good, and you know the banks are giving out more money to companies, they're giving out more money to lenders, they're giving out more money to home buyers. Those are the times when you will see REITs and BDCs benefit greatly from that market exposure, right? So right now at $8.80 per share, I'm comfortable. I'm very comfortable with throwing some money, more money, into PFLT. Let's get to their forecast. Let's get to the forecast. 6 analysts that cover PFLT stock have a consensus rating of buy and an average price target of at least $10.96, which forecasts a 24% increase in the stock price over the next year. Again, please understand that analysts are just people like you and I. They're nobody special, okay? They sit down with their data and they sit down with their tools and they generate in their minds what they believe that this stock is worth. Nothing is concrete in the stock market. You have to know that, right? But they are right now, they are saying that they believe this stock is currently undervalued. So you take that and do with it at what you will. All right. The last thing we're going to do is cover their dividends. Right now, their dividend payout yield, according to stock analysis, which sometimes I found to be a little off by a couple numbers, but we'll take it at face value right here. Right now, they're paying out 13 to 14%. Okay, 13.99%. I'm just going to go ahead and say that's 14%. Okay, so they're paying out 14% with their dividend yield, you all. And again, this is a monthly payout. So what does that come out to? You see the last couple payments here. They have been 10 cents, a little bit over 10 cents, right? The last thing, let me drop all the way down. You can see that the dividend chart does look good. They haven't decreased their dividend. They've been able to at least remain stable since they've been paying it out, and thusly they haven't had to drop it. That I love to see that. You'll see the dividend growth hasn't gone up much, but I'm okay with that. As long as we don't see this chart right here taking massive dips, I'm cool. All right. So that's where we're at with PennantPark. Again, this is a monthly paying BDC stock that pays us monthly just to hold it. And if you are interested in investing in REITs or BDCs, I think PennantPark is worth checking out. At least take a look at it and let me know what you all think. Drop a comment in the comments down below. Let me know what you are investing in this month. I told you I'm throwing $100 in here. That's going to probably get me a little over 10 shares. And I'm cool with that because I believe that this company has a lot more upside potential than a lot of the other REITs and BDCs that I've seen people do videos on. So let me know what y'all think. And I'll see y'all in the next one. Thank y'all for watching. Please, please, please come back tomorrow. Hit that like, subscribe, and I'll talk to y'all later.